Hey traders, welcome to Charts and Coffee. Hope everyone's doing well. I got a new coffee machine today. So warning to everyone out there. I am extra caffeinated as of late. so yeah, we have a little machine that'll make lattes and cappuccinos and espressos, or I'm just learning all this lingo. So right now I'm rocking an Americano. I don't even know what it is, but the Gizmo walked me through it. It was a blast. And my sector secrets folks, buckle up. Raghee's had a lot of coffee today. All right. As always, thank you for being a part of our Charts and Lots of Coffee crew. Let me know what you're drinking out there. If you're got some coffee in the mug as you're getting ready for this Wednesday trading session. All right, what do we have planned for Wednesday? What do we have going on for this Wednesday, December 7 session? All right, take a look at the hot zones. We have had volatility from the Bank of Canada. So this has been something we've seen before, where if, and I don't know, right, if they will, we're going to wait for the result, but if this comes in, right, we're expecting this rate, let's say they only hike to 4%. This will not only send equities higher in Canada, so you can think of, say, maybe EWC as far as an ETF that maps to a lot of bank and railway stocks in Canada. This has also been bullish when it comes in less hawkish. It's also bullish for the U.S. equity markets. We've seen this before. So not a hot zone that I would say is typically extremely telling, but it is one that we've seen reaction to before. So heads up, 10 a.m. Eastern, the Bank of Canada. All right, next is scrolling on down. Again, we have crude oil inventories is normally, when I'm in the sector secrets room with the folks, normally this particular hot zone is great for an hourly price movement range, what we call first come, first serve fade. All right, what the heck is that? So many of you who are already familiar with the HPMRs, I don't know how many of you don't know what that is, but I'll show it to you here real quick. Those of you that are familiar with the HPMRs know them as these zones above and below price. And this is a process that we created, really with my third book. And it's really well over 10 years old in terms of a process. But we have completely revamped the way in which the volatility based on time is plotted on the chart. This is the most accurate look at, this is an algorithm, not to get all fancy and highfalutin. See what happens after I get a fancy coffee machine? I get over caffeinated and I get fancy. No, but really, the algorithm is dependent on the way that we extract data and how much in terms of market look back we're seeing the high-low ranges from every hour. So this is by far the most accurate hourly price movement range algorithm that I have had. And a huge shout out to Lorna Bot for making this happen. This is a completely independent indicator of any other data sources. And we have absolute granular control over how we want this to now plot. And I'm super excited about it. Now, come 10:30 Eastern, we get this dump of data from the EIA, the Energy Information Administration. We know whether there was a build up or a drawdown of crude, and then there's a reaction on the intraday chart. And normally what we do is we look for a fade from one of these two zones. However, we are also looking at what is possibly a very early transition into maybe a downtrend but possibly a last gasp effort for crude oil to hold a -2 standard deviation of the anchored volume weighted average price and bounce. I talked about this in the free video yesterday, so if you want a little background on that, you can check that out at the Simpler Trading YouTube channel. But this is something we're going to watch. And if we get the bounce, that's going to bode pretty well for oil stocks as well, which have been hit hard by what is amounted to 3, if not really 2, solid sell-off days in crude oil. So that's how we start putting the economic calendar and potential setups together. And that's pretty much the hot zones that we have. All right, gang. So as always, this show is about your questions. So let's jump on into them. Starting off with, first up, Prince asks, is there a number of points that would make a candle a COUS? All right, how many Princess Bride movie fans out there? Definitely me, one of my top 10 favorite movies. And if you remember in the, the forest, the rodents of unusual size, well, we have candles of unusual size, right? That's what a COUS is, taken right from rodents of unusual size, Princess Bride. To have a COUS, to understand, I can't get all mathematical on that. I don't have the time. Remember, the more that we're getting really granular about why something is what it is, bigger patterns, more complex or subjective indicators, it introduces much more room for error and time. It's very time consuming. This is usually something that I'll do as an intraday trader, so I don't have the luxury of time, even on a 5-minute time frame. I will look back, Prince, on the last, say, 5 to 7 candles. So there's no number of points. It's when I look back visually, it's a visual assessment. When I look back on, say, 5 to 7 candles, where is the current potential candle of unusual size in terms of its high-low range? And that's the way I look at it. All right. That's the way I look at it. And so, yes, inspired by Princess Bride and rodents of unusual size in the, is it the swamp? The fire? Either the forest, swamp. Anyways, my fans, you know what that means by Princess. And if you haven't watched the movie, definitely check it out. All right. Next up, what is my read? What is my read on the S&P for now and the rest of December? For now is what I can give you. And then, as far as the rest of December goes, it'll be very much oriented to the structure of the daily. So let's take a look at that daily. We have maybe as much bullishness as we've seen in the S&P since August, since the middle or end of August. As far as now, it's still in a choppy environment. Overbought, oversold is still the dominant psychology. It's still the dominant strategy. That means using the mean of the V-score, overbought and oversold, the high-low ranges of the slow stochastic, which is the best way to look at high-low ranges in terms of price. V-score is the best way to look at the support and resistance, the high-low ranges in terms of volume. You put those two together, and I would still say we're pretty much contained in a range. The anchored volume weighted average price, those of you that took my volume decoded class just recently or even a few years ago, most traders use a rolling VWAP. We use an anchored VWAP. We want to make sure that we're studying volume from a certain price forward. That said, the anchored VWAP is still very much, as you can see here, part of the ceiling, but don't neglect that 200 exponential moving average. Exponential moving averages, I have found over the past 10 to 15 years, have very slowly, become my go-to moving average because we operate with recency bias, as does an exponential moving average, which weights more recent data heavier within that weighting of the average. So exponential very much in play as well. So keep an eye on both. It's also very susceptible to the NASDAQ. So as far as the rest of December goes, I'm going to presume it stays in the range until it doesn't. I'm going to also presume that unless the NASDAQ starts moving higher with the Dow, the S&P really is going to be stuck in a range because of the push-pull of a sort of a lagging or weak NAS and a stronger relative outperforming Dow. All right, next up is good morning, Costa. Oh yeah, Mimi, Costa Rican coffee. When I was there a few years back, I did not know the fruits and vegetables are amazing there, which I expected because any of that volcanic earth. When I was in Seoul, same thing. Costa Rica, absolutely. But I didn't realize the coffee was so damn good. It is amazing. All right, next, I'm actually having some Ethiopian roast, which is actually one of my favorites. All right, awesome, Mimi. Next up is Robert. Good morning. If the Fed holds to 75 basis points, how do I think the market will react? Well, I will trade what I see, not what I think. And to that point, you're talking about December. We have our 14th meeting, right? Can't overlook that. Next Wednesday, things get pretty interesting. And if you take a look, this is how you want to gauge it, Robert. It's where are we expecting to end up once the announcement is made? And this right here shows that we're going to be at 4.25 to 4.5. So 77% probability that that's what we're going to see. And if our current target rate is 375 to 400, well, then now you know, okay, what does that mean in terms of expectation of the move higher? But this is where we're expecting to be. And as long as this column is closer and closer and closer to 80, 80 is where I would say, we don't know it's fully discounted. That's as if we know what everyone is thinking and discounting. Yeah, that's impossible. But I do know that I will consider when one of these columns reaches or exceeds 80, that's the most likely scenario as far as what we expect. And that would be quote unquote fully discounted. And that's just another way of saying it's baked into the cake. It's priced in. So I'll rely on that. Look, this is such a fantastic way, again, to simplify macroeconomic understanding of what the Federal Reserve is going to do next. By the way, that's the only reason I personally look at macro. Not because I'm going to front run the market and get all clever, but because if the Federal Reserve is looking at growth, inflation, and jobs, and that is what is discounted into the Fed fund futures, and that information is used to create this graph, this gives me an understanding of what we, as a trading and investing public, are communicating to them, the Federal Reserve, as far as what we think. And believe me, the Federal Reserve knows what this data is reflecting. And they know what a surprise then would be, and they know what result would be in line. So unless they're looking to make a shock wave, right? Unless they're looking to make waves, they're gonna see what's discounted. They're gonna see how far that is from their goals, and that graph is remarkably accurate. It's the best way to understand what we are expecting and pricing into indices and treasuries and currencies based on the Federal Reserve's most likely move. Yeah. Kind of what's that saying, Wayne Gretzky? Skating to where the puck is? That's skating to where the puck is. All right. So which coffee machine did I get? It's a Breville One Touch Barista, or Barista One Touch, I think. Yeah. So that's the machine that I got. Bustelo is very good. Robert, yeah, Bustelo is very good. Yeah, absolutely. All right. So got some new names here. Very cool. All right. Thanks for the Stoker from Tandem Coffee out of Portland. Like it. Thanks for the recommendation, Drew. All right. Heads up. Can we check out metals? Yeah, gold is in an uptrend and it's by the dip time. We're going to look for pullbacks to get long in gold. Silver's been there for a really long time. Silver's tricky. It acts a little bit like gold, and it acts also a little bit like copper, and it can absolutely do its own thing. And the per point dollar amount of silver futures is beefy. Silver is fantastic when it's working with you. It can be extremely volatile and break hearts at a moment's notice. So I usually recommend, unless a futures trader is out there and has about a dozen trades in silver where they get a feeling for what this market's capable of doing, both for and against them, I would recommend options on silver or options on the SLV ETF, but that's definitely a pullback buy scenario. We're bullish there on silver. And I did mention copper. Copper's got the more economic outlook. Copper and crude together are what I call the two canaries in a coal mine. If crude is strong, if copper is strong, omitting any significant changes in crude oil production policy from OPEC. In other words, if we're going to continue lower, the expectation for crude has got to be less demand or increased output. But regardless, when I look at crude and copper as a reflection of economic optimism, both should be heading higher if that's truly what we're going to get. So right now, it's very kind of wishy-washy as far as what copper is saying. It's struggling to find footing north of the 200. It has yet to get above the anchored VWAP. But I do like, in terms of buy the dippable, silver, gold. We'll see what copper does. All right, next up. How can we use, hey there, Zane, how can we use the market maker expected move to locate ES day trading targets? I don't use them, Zane, so I have my own expected move. I don't actually use any kind of market maker expected move information. I use historical volatility, which, if you think about it, would already reflect anything market makers or the market or hot zones could do. So that would be one angle of volatility, right? Whether that be implied volatility, percentile, etc. What I want to do is I want to look back minimally over 6 months, hour to hour, right? Not for the whole day, hour to hour, and ask myself, what happened between 7 and 8 a.m. Eastern, or 8 and 9 a.m. Eastern, or 9 to 10? You get the point, right? Every hour is segmented out, and we look at the volatility historically. Now, that historical volatility is oftentimes going to, I would believe, I don't really know because I don't use that information, but I think we could extrapolate that whatever influences the market, a historical volatility measurement is bound to capture, because we're casting a wider net into all sorts of behavior. And then we get this sort of, curated, if you will, right? Who's moving the market? Doesn't matter. As long as they're moving the market, that information will be calculated into the hourly price movement range. So thanks for the question. All right. Glenn asks, what membership do I need for daily live trading commentary? Oh, for daily, if you want to trade with me daily, the best place is the Sector Secrets room. I'm in the options room, the simpler options room, once a week. So today, I'm going to be in there at 2 p.m. Eastern. So every Wednesday there at 2. In the futures room, I trade with the futures folks Tuesdays and Thursdays. And we have an Ask Me Anything session on Friday in both the futures room and the Sector Secrets Mastery. And this is my schedule in the Sector Secrets Mastery room, which is the only room that I'm in every single day, right? That's just my room. The other rooms, for example, the options room and the futures room, for those of you that do not know, we have multiple traders contributing their trading ideas and their market outlooks in both those rooms. And then there's masteries where, one of us, or sometimes one or two of us, will get together and be very focused on our trading style and our trading style alone. So it's more focused to that trader's tools, approaches, etc. Now, for us, I like to day trade, I like to swing trade, and I like looking at longer term portfolios. So we look at the 5-minute every morning, we look at the daily time frames throughout the week, and we look at the weekly and macro once a week. So that's the schedule there, Glenn. Thanks for the question. All right. Wayne G says, you also miss 100% of the shots you never take. Very true. Very true. I love sports analogies, Sam. And, for me, I love the way Grandpa Buffett explains that us as traders or investors, we play in a no strikes called game, which is to say we can watch pitch after pitch after pitch go by. And until it's over the plate in the area that we know our strategy and our skill set has higher probability, we can just sit and wait. And there's no cost to that. So I hear you. I want to make sure, though, that traders don't think, well, I must be swinging at balls. Otherwise, how can I connect and get on first or second or third or hit a home run? So I always want to caution feeling like we have to do something to feeling like this thing is so good and so familiar and in a high probability zone for us. That's why I'm going to get the bat moving. So thank you so much. Love the sports analogies. Absolutely. Let's see here. Smash a like button. I appreciate that, Robert. Whether it's for the coffee or for the charts. No, I appreciate it. Thank you. Thank you very much. All right, gang. I'm out of time. I'm out of time. So, what's my third book? Oh gosh, Jr. I would not run out and go get it. But the third book was called. Is it? Oh my gosh. You think I remember the title of my books? Forex trading for maximum profit, 30 days of trading, and oh my gosh. I don't remember. I don't remember. I do want to write another book at some point, and one of the things over the years that I've been doing is just kind of distilling everything I do. What the heck was the name of the book? Oh, that's right. Forex in 5. That's right. Forex on 5 hours a week. All right. So there you go. Wow. All right. Clearly, I need more coffee. Gang, have a great one. As always, thanks for being a part of the Caffeinate and Dominate crew. And I will see you all tomorrow, same time, same station. Thanks as always for smashing the like button. Leave any comments, questions, requests below in the comment section. And I will talk with you tomorrow. Be good to each other.